Hey, Dan Passarelli here. Well, the market pulled back just a little bit today, off 1.1%, with SPY closing at 671.40. We are below the 50-day moving average, which is a relevant figure here. And so tomorrow is going to be a key day, because if we get confirmation, we could see the market coming down a little more. Why is the market coming down? Well, it has a lot to do with the costs involved in this AI race. We all know it takes money to make money, right? Well, when we're inventing some new thing like AI, there needs to be a great deal of technological resources behind that. Humongous data centers, humongous power, resources. And where's this money coming from? So that's really the branch here, the fork in the road. There's some companies like Google who just have a bunch of money and they can keep spending the cash that they have. But then there are some other companies that, like CoreWeave, for example, who are just borrowing more and more money. They're issuing debt, which shows up as a liability on their balance sheet. And the more and more they issue, the bigger and bigger of a risk it is. And when we have a whole bunch of companies like that, it becomes potentially systemic risk. Now, do we end up weathering this storm, or does it become a huge tempest? Well, we have to see. But if we look at some of the bets that are going on, we see tons and tons and tons and tons of call spreads, mostly call credit spreads, mostly on AI stocks like Nvidia. Curiously, one of the few put spreads, and put credit spreads, of course, are looking for the stock to not fall too much, was on Palantir, which arguably is the most overpriced AI stock of all of them. When we see all these massive call credit spreads trading, I mean, look at this one, 10,000 of these, and then another 1,000, then another 500, and then another 5,000. I mean, thousands and thousands of call credit spreads. That means there's a lot of confidence that Nvidia and a lot of these AI stocks are not going to continue higher in the short term. Looks like most of these have an expiration date of Boxing Day, December 26th. That could put a damper on the Santa Claus rally. This is around the time when we're looking for the market to start heading higher. I guess it really doesn't start until these verticals expire. But in the short term, the smart money is telling us that there's a pretty good likelihood of the AI rally staying pat at best, not moving higher, and possibly moving lower. Hope that helps. This is Dan Passarelli, Trade Smart.